Welcome back to Boss Economic World, where we don't just read the headlines, we interrogate them until they confess where the money is hiding. I'm your host, and today is November 29th, 2025. Ladies and gentlemen, pour yourself a strong drink. Maybe a crude oil cocktail with a nuclear garnish. Why? Because the impossible just happened in Ottawa. The civil war of Canadian energy is officially over. And guess what? The economists won, the activists lost, and your electricity bill is about to become the most interesting political document in the country. We are talking about the newly unveiled Energy Pact between our Banker-turned-Prime Minister Mark Carney and the Iron Lady of the oil sands, Alberta Premier Danielle Smith. On the surface, it looks like a handshake. But if you look under the table, it's a massive restructuring of the Canadian economy. We saw the resignation of Environment Minister Steven Guilbeault, the Green Crusader himself, which tells you everything you need to know. The age of moral environmentalism is dead. The age of math-based survival has begun. Today, we are going to break down the Carney-Smith Pact, the death of the clean electricity regulations, the resurrection of nuclear power, and why the government suddenly wants to build a wall, not a physical one, but an electric wall, against the United States. Buckle up. Let's restore the full picture. Let's rewind the tape. Remember the Trudeau years? The strategy was simple: regulation. The stick. The federal government looked at Alberta's gas plants and said, shut it down by 2035 or go to jail. Well, it turns out you can't regulate physics, and you certainly can't regulate a province that holds the keys to your GDP. Enter Prime Minister Mark Carney. He's not an activist, he's a central banker. He looks at a gas plant and doesn't see sin, he sees an asset with a depreciation schedule and a marginal abatement cost. Yesterday, Energy Minister Tim Hodgson dropped the bombshell: the federal government is willing to suspend those hated clean electricity regulations for Alberta. Why did this happen? Because the federal government blinked. They looked at the capital expenditure required to hit a net zero grid by 2035 using only wind and solar, and the calculator exploded. We were looking at potential blackouts and rate hikes that would make voters storm Parliament Hill with pitchforks. So, the stick is gone. Now we have the deal. The condition for suspending the rules? Alberta has to adopt a stronger industrial carbon pricing regime. Specifically, Alberta's tier system is getting steroids. According to the pact, the price is ramping up to a minimum effective credit price of $130 Canadian per ton. Now, to the average viewer, $130 sounds like a random number pulled out of a hat. It isn't. Let's do the math. At $170, the oil sands become uninvestable compared to the U.S. Permian Basin. At $50, nobody bothers reducing emissions. $130 is the Goldilocks zone, high enough to force companies to actually build carbon capture tech, but low enough that they don't pack up and move to Texas. This is the boss economic truth: the government has stopped trying to ban fossil fuels. Instead, they have decided to become the senior partner in the fossil fuel business by extracting a higher rent in exchange for regulatory certainty. Let's get technical for the finance pros watching. You need to understand tier because this is where the smart money is going. Alberta's tier system is an industrial carbon market. If you are a large emitter, you have a benchmark. If you emit less than the benchmark, you get credits. If you emit more, you pay. Under the old system, the rules were loose. Under the new Carney-Smith Pact, Alberta is committing to globally competitive, long-term carbon-effective prices. It means Alberta is creating a localized carbon market that rivals the European Union's ETS. Minister Hodgson said, we'll be working through how they will restructure their tier system. Translation: the feds are going to audit Alberta's books to make sure the credits aren't fake. If you are an investor in Canadian energy, this is the best news you've heard in a decade. Why? Certainty. Capital hates uncertainty. Capital hates, maybe there will be a cap, maybe there will be a ban. Now, the rule is clear: you can pump oil. You can burn gas for electricity. You just have to factor a $130 per ton line item into your OPX. The removal of the emissions cap on the oil and gas sector is the cherry on top. The cap was a blunt instrument. The price is a surgical tool. The resignation of Steven Guilbeault confirms that the Liberal Party has officially shifted from ideological decarbonization to economic decarbonization. Guilbeault wanted to save the planet at any cost. Carney wants to save the balance sheet. The balance sheet won. Now, let's talk about the grid. The goal is still net zero by 2050. But how do you get there if you aren't shutting down gas plants immediately? Answer: the atom. Minister Hodgson was explicit: nuclear power will have a major role. Finally. I have been screaming this on this channel for years. You cannot run a G7 industrial economy on windmills and hope. You need baseload power. The pact includes a pledge by Alberta to create a nuclear strategy by 2027. They are already looking at a two-reactor plant near Peace River. Let's look at the economics of SMRs. Alberta is looking at deploying SMRs to power the oil sands. This is brilliant circular economics. 1. Use nuclear heat to extract bitumen. 2.0 emissions from the extraction process. 3. Sell the clean oil at a premium on the world market, or at least avoid the dirty oil discount. This is a massive capex play. We are talking billions of dollars in infrastructure. For the construction industry, engineering firms, and uranium miners, the open for business sign just turned on in Alberta. The boss prediction? By 2035, Alberta will look less like Texas and more like Ontario, a mix of heavy nuclear baseload and gas peakers, with wind filling in the gaps. It's the only model that works economically. Here is the part of the interview that gave me chills. And it should scare you too. Minister Hodgson said, "The reality is today we have 13 island grids in this country." He's referring to the fact that Canadian provinces don't really talk to each other electrically. Alberta connects to Montana. Ontario connects to New York. Manitoba connects to Minnesota. We are wired north-south, not east-west. Then Hodgson dropped the geopolitical hammer. In a world where our southern neighbor no longer believes in multilateralism, no longer believes in free trade, it's probably not the way we ensure our economic sovereignty. It is late 2025. The geopolitical landscape in the US has turned inward. Protectionism is back. The US is threatening tariffs on Canadian energy or demanding concessions that hurt our sovereignty. For decades, we relied on the US grid as a backup battery. If Quebec needed power, they sold to New York. If BC needed power, they bought from Washington. Hodgson is saying those days are over. We can no longer trust the US to be a reliable partner for our critical infrastructure. The government is planning massive transmission lines to connect the provinces. Imagine a copper spine running from British Columbia to Nova Scotia. When the wind blows in Alberta, they send power to BC. When the hydro dams in Manitoba are full, they send power to Saskatchewan. When the sun shines in Ontario, they send power to Quebec. This is the most expensive infrastructure project in Canadian history. We are talking about blasting through the Canadian Shield and crossing the Rocky Mountains with high-voltage DC lines. The cost will be astronomical. We are talking $50 billion to $100 billion. But here is the boss take: we have no choice. If the US closes the border to electron trade, or imposes a 20% tariff on electricity imports/exports, Canada's 13 islands will sink. This isn't an environmental project anymore. This is a national defense project. And who pays? You do. Expect transmission fees on your utility bill to rise. But the alternative is being held hostage by US trade policy. In typical boss economic world fashion, let's summarize who makes money and who loses money in this new 2025 reality. The winners. 1. Alberta Oil and Gas, they dodged a bullet. The hard cap is gone. They just have to pay a predictable tax which they can pass on to consumers or offset with tech. 2. The nuclear industry, from uranium mining to reactor construction. This is the golden age. If you aren't long on uranium, what are you doing? 3. Utility infrastructure stocks, companies that build transmission lines. The east-west spine is a guaranteed contract for the next 20 years. For Mark Carney, he proved he can make a deal. He sacrificed the purity of the environmental movement to save the stability of the economy. He looks like the adult in the room. The losers. 1. Hardline environmentalists, the resignation of Guilbeault is the final nail in the coffin for the degrowth movement. The government has chosen green growth over green austerity. 2. The consumer, that $130 per ton price creates a floor for energy costs. You won't see cheap fossil energy again. But you also won't see blackouts. You are paying a premium for reliability. 3. Renewable purists, if your business model relied on government mandates banning gas, you are in trouble. You now have to compete with nuclear and gas with CCS. Let's wrap this up. What happened on November 29, 2025, wasn't just a policy announcement. It was a correction. For 10 years, Canada tried to build an energy policy on hopes, dreams, and moral superiority. It didn't work. Inflation, regional alienation, and simple physics got in the way. The Carney-Smith Pact is the return of economic pragmatism. It acknowledges three things. 1. Oil and gas are going to be around for a while, so let's make them as clean as economically possible, not ideologically possible. 2. Nuclear is the only way to decarbonize a grid without destroying the economy. 3. Canada needs to physically wire itself together to survive a hostile global trade environment. Is it perfect? No. Is it expensive? Yes. But for the first time in a decade, it actually makes sense. The invisible hand of the market was getting slapped around by regulations for too long. Now, the government has decided to stop slapping the hand and instead, put a $130 price tag on its glove. That's the truth behind the news. The climate war is over, the infrastructure boom has begun. Adjust your portfolios accordingly. I'm the boss. Stay liquid, stay skeptical, and I'll see you in the next one.